Hello traders, welcome back to our channel. Sometimes, price moves too fast without any significant pullback or return to supply and demand zones. This might frustrate your trading style because you miss several trading opportunities for a few pips. This is very common in trading, don't worry about. With time you are going to use to this and will be less irrelevant. Important is to stick with your strategy because this is a long-term run and we need it to succeed. A channel can be used as an entry pattern for the continuation of an established trend as part of a trend-following strategy. A channel forms when price action is controlled by two parallel sloping lines and has tested each of these lines at least twice. An ascending channel indicates a bullish trend, with the support line connecting consecutive higher lows, and the resistance line connecting consecutive higher highs. A descending channel indicates a bearish trend, with the support line connecting consecutive lower lows, and the resistance line connecting consecutive lower highs. The classic scenario or the textbook example in a descending channel is to wait for breakout and retest in upside direction. But in my observance this scenario rarely happens this perfect. We often see a breakout with a small pullback, not a retest. A false breakout. Breakout below the support channel line. With a few words, these scenarios are equally often as a textbook scenario, be aware of this. On this chart we have British pound US dollar. Daily time frame. Price is moving in a downtrend in a very regular way. This is why it fits inside a parallel channel. As we already told, we have different scenarios, but we must stay focused on the bearish one and trade with a trend, not against it. As we frequently do on the beginning of each analysis, we define the market structure. In this case we have lower low and lower highs. Price had also made zigzag structure inside the swing move, but they are not considered lower low or lower high. Price broke below the support line of descending channel. This event made the trend even more bearish and aggressive. Our goal in this moment is to enter short at pullback. Seeing this aggressive sell-off, we expect a small pullback, like the previous one. Price can retest the support line of the channel, can pull back at resistance level, or can pull back at hidden supply zones created during the sell-off. In this moment, we shift on lower time frame in order to define these zones. As you already know, our strategy is based in supply and demand zones, plus other correlations. We also used a fib trend-based tool to define the AB equals CD levels. This will help us to define the next lower low level. Recommended broker is Longhorn FX. Longhorn FX is an ECN broker dedicated to delivering a superior trading experience to traders, no matter their level of experience. Their services are based on transparency, innovation and efficiency, ensuring an unparalleled trading experience for all. We shift on 4-hour time frame. We have a supply zone just above the resistance level. We need to shift on a lower time frame again in order to find supply zones that are located more closer to the current price. On 1-hour time frame, we defined all the supply zones and waited for price to validate our scenario. Fibonacci tool will help us to define which number correlates with the zones. We watched closely the first supply zone, which was a strong one, with a large bearish candle, that leaving the base. A liquidity zone was created below it. Price made an attempt to break above this liquidity level, but failed and dropped aggressively in downside direction. In this case we had a continuation double top pattern. We missed the entry because our order was located at supply zone. During this sell-off, price created new supply zones, very similar in structure with previous ones. Once again, we are going to stick to our strategy and trade the supply zone. The zones are close to each other, and in this case is recommended to put stop loss above the second zone. Price continued downtrading smoothly, and we have almost the same structure. The liquidity level is created just below the supply zone. Price made the first attempt to break above and failed. Price continued to consolidate. Finally, price broke above the liquidity level and was very close to the supply zone, our entry zone. We missed the entry again, 2 times in a row. This happen in trading, don't worry about. Important is not to trade with anger and randomly. Stay disciplined. Price dropped sharply in downside direction. On both examples we have a similar pattern, a continuation double top pattern with a fake out on the right top. This is a price action pattern as we mentioned it on the previous video. Keep in radar this type of pattern. Thanks for watching the video till the end. See you to the next one.